Alright, good evening everyone. Okay, welcome to this week's session. So as usual, okay, I'll run through the markets over here, highlight some of the key opportunities. Then of course, if you guys have any questions, feel free to put it into the chat. I'll be then able to kind of address the questions that you guys have, okay. First up, let's just very quickly talk about the active trades that we're in. Okay, so good case studies as well to talk about risk management and of course trade management more specifically, right? So this two trades here that we're in, basically crude oil as well as the Aussie yen, they are trades from last week. So Aussie yen was triggered on Friday, and then crude oil here same as well. Okay, and today Aussie yen actually opened with a gap, pretty good. I think Aussie yen has a very good opportunity to just hit our target. We'll just leave it as it is. But good opportunity for me to talk about trade management, right? I mean, these two trades, very good opportunity to shift stops to break even. So in terms of trade management, typically there are two phases, right, or two stages. The first is to shift stops to break even to mitigate our risk. Basically take away the risk on the trade so it becomes risk free. And then the other stage, or the second stage, right, once you have shift your stops to break even, would be actually to trail your stops, right, to protect profits, or even start to consider, can I go for extended target? All right, so that's the second stage where it's already risk free. How can you actually protect most of the profits, and go for potentially more, okay? So this is where the context of a trade comes in, right? So we kind of highlighted over and over again. I always bring this up in terms of the DSC framework, right? Direction, setup, and context. Okay, obviously the direction and the setup is more of like the early phase of a trade to plan it, and then once you execute it, context plays a part as well. But of course, in terms of like trade management, context comes in pretty important. Where today, if you take a look at crude oil, okay, so if I bring you back to the higher time frame to talk about it, right? So if you look at the setup itself, crude oil, our target as of now is somewhere around 65.4, which on the higher time frame, 65.4 is somewhere there, right? Which is where the swing low is. And then from a high time frame context perspective, right? If today you want to go for more, that's where you can consider, all right, would price potentially extend towards this low? Okay, and therefore you can potentially go for like close to 64, right? Another 40 cents addition in terms of your target. Okay, of course, the baseline here is with just the initial target, the risk reward is already there. Okay, if you really want to go for more, that's something you can look into. On top of that, you can also start to consider, all right, with this trade risk free, can I look for opportunities to scale in? Okay, which means same trade idea, same direction, but having an additional position that you can consider, right? Now, honestly, crude oil here may not be the best trade to be scaling in. So certain things to consider, right? If let's say today I'm going to scale in from this high to this low, right? Obviously going down to even a lower time frame. My entry point on this potential scale in would very much be the same as where my entry point is for this initial trade, which means that if I'm going to enter on a scale-in trade, this trade will be actually at break even, which isn't ideal, right? You don't want to get out on one trade and get it in instantly at the same entry point. It doesn't make sense. All right, so in that way, you naturally wouldn't want to be doing a scale in. All right, now would you want to go for extended target? Right, this is where, from my perspective, if today you're simply doing a retracement trade or a short-term trade, right? Basically, you're not trading in line with the overarching direction on a larger time frame perspective or a longer time frame horizon. You do not want to kind of go for an extended target, right? You don't want to be too greedy because you understand that, all right, you're just trading the short term, right? So in the context of this particular trade here, I would say that having a target at this low, it's more than enough, right? Because if you try to go for extended target, the downside is, what if price do not extend further, right? It taps into this area and then it bounces back up, then you're missing out on that potential, full profits that you could have capitalized on, right? The same context goes to odd yen, right? We're running on this trade, you can see that odd yen potentially can come back to this low, right? And of course, in terms of Elliott wave principle, that will be your 1, 2, 3, very, very simple move. However, again, the context of this particular short trade is a short-term thing, right? We're basically looking at a pullback, all right? So obviously we expect price to come down, but doesn't necessarily need to do that, right? Price can literally just tag this, do a little bit of a fake break, and then bounce and then start going higher. So again, in that context, I wouldn't go for extended target, right? So again, on this one here, I'll just be happy if price can come in and tag us around the 96, right? So to be a little bit more specific, the target I put is around 96, right? So it's about 1:1.9, just slightly below 2. But average out, most of the trade we take is about 1:2, right? So again, this is a very good example of, in terms of when I do not go for extended target, right? Very, very seldom I actually go for that unless we are riding on a trade that also aligns with the higher time frame, longer term fundamental bias, right? Yeah, so this is the trade. In fact, on Aussie yen, I've actually decided to trail my stop from break even, okay, to just above this high, right? This swing high here. So around 96.7, I've actually trailed that just to protect whatever that, there is right now. If let's say the market just decides to U-turn, at least I don't give away the entire potential profits over here. Okay, so this two trades is running pretty decent as of now. Okay, so just want to use this as a context to talk about the management aspect of things, right? And of course, I think the setup, everything is there, pretty straightforward. Okay, so let's take a look at the other markets for the week. Okay, starting off with the dollar index, it's pulling back. We are expecting that to happen. So nothing much out of the expectation. We're expecting market to pull back, towards this key area at 97.6, 97.3, and that's where we expect the market to bounce, right? So overall, we're going to be expecting a bullish market. Very, very simple, 1, 2, 3, right? So short term, for the next maybe 2 days, we expect dollar to pull back, but then after that, when the dollar comes into a key area, we'll then expect market to actually bounce higher from there, okay? So euro dollar, pretty similar, right? Just the inverse of things. So we expect this to pull back towards the key area, and then we're going to look at opportunity to sell it. Just bear in mind, this is not very, very impulsive in nature. So there's also the possibility where the market goes into the key area and doesn't get rejected, right? What this means is that the market can pull back towards this. That's a simple pullback and then continue to go higher, right? Which means this then becomes the corrective development. So the part here obviously is we're not just going to sell it when the market goes into key level. We also want to observe how price is developing at the key level, right? How it goes into the key level, how it reacts at the key level. All those are pieces of information that we can piece together to decide, whether we want to sell it or not, right? So that's on euro. GBP USD here, we are expecting that pullback. You can see the differentiation between euro and the pound. The pound came down with much more momentum, and if we can get a corrective development here, I'm actually more comfortable in selling the pound dollar compared to the euro, right? But for now, we'll see, right? Again, this would take some time. Maybe the setup will only come closer towards like Friday, closer towards the end of the week, right? So we'll see. Okay, so that's the outlook on the pound. Aussie dollar here, building up a potential buy very, very soon, right? I mean, last week we were in that consolidation phase. The market actually broke below that, but then instantly reversed, right? So some kind of V shape. So in terms of Elliott wave pattern, I'm looking at this as expanding flat, right? So this is your first push, that's your expanding flat, and we get a nice little push up. So then, we are expecting this move, I did not put a pending limit order as of today because again, it's Monday. Very seldom, I'm gonna place a new trade on Monday. But there is a setup building up over here, right? So if I were to put in a little bit, right? So that's the higher time frame liquidity, right? We did not really get a break of structure, right? We didn't really get the break of that. However, we did get an early sign of a change in the state of delivery, right? Where you can see, momentum bullish candle and then it reverses and kind of close above that. So obviously not the best. The best is where we get a nice, break above that, which means market will close above and then only start to pull back. But I always say this, right? There's no perfection in trading. It's all about the probability and are you comfortable in taking that, right? We do have a little bit of a mini pullback here, which gave us the order block, right? And of course, if you start to pull in the fibs, okay, just to be a little bit more precise, okay, that would give you a nice little confluence there as well. Okay, something like that. Yeah, so we'll see how the market is going to develop, by tomorrow morning. Okay, if things looks great, we'll probably have a setup tomorrow morning, right? And then as usual, I'll just send it out to you guys. If there is, okay. If not, then you just be patient again on the Aussie. Right. Then we have the dollar CAD. So dollar CAD here, very similar to the dollar index. I'm expecting this pullback, right? Coming into the key level, we expect some sort of a liquidity sweep and then continue to the upside to complete this simple three-wave move, okay? So again, we'll see, okay, how the market is going to come down towards the key area before really committing to anything, right? So we'll keep a lookout on that. Dollar yen, okay, dollar yen is coming down pretty aggressively. I mean, overall, the yens are coming down, right? That's where we get the odd yen moving as well. There's a good possibility if I start to pull a little bit of fib here, we can expect price to come back around that 50% mark. Okay, which means there's a little bit more downside that we can expect for dollar yen. Okay, now we don't have a sell setup on the dollar yen, so while we are expecting the pullback, we're not gonna trade it anyway. Okay, we're just gonna wait for the pullback to happen, and then if it comes into the key area, we might potentially get a buy, right? So that's the look on Aussie. That's the outlook on dollar yen. Okay, so nothing much as of this week right now. We're just simply expecting to pull back towards a key level. Then we have gold. Okay, gold here, we are expecting a continuation to the upside. To really just, the simplest expectation here is the channel. Very nice structure here as well, right? You can see how the market bounce, pull back, bounce, pull back. Right now, it seems like it's bouncing, potentially breaking down, and then the next pullback would also give us an opportunity to look for the upside. Okay, so very decent and clean structure is developing. However, if you were to go down to the lower time frame, I really don't have a clean setup yet. Okay, furthermore, price is basically at the very top. We just need to wait, right? Because if you start to look for setup right now and then the price just keeps going, then you just need to keep adjusting, right? Which you don't want to waste too much time on that. Until the market decides to pull back meaningfully, we can look into some areas of interest. Like for example, this is an order block. We'll see, okay? So right now there's a clear directional bias, but there's no setup, right? So we just be patient on it. Silver is where it's a little bit conflicting if you are kind of comparing it to gold, right? Because most of the time, silver and gold, they are positively correlated, which means if my outlook on gold is bullish, then there's a very good chance silver is also going to be bullish. But in terms of the pattern that is developing, it's slightly different, right? I mean, you can see. Okay. Silver chart pattern is telling me there's a possible push down to complete the 1, 2, 3. Then we need the upside. Now, can this happen while gold continue to push higher? Yes, it's not that, they need to always move in the same direction. They have some correlation, but it doesn't necessarily mean all the time. Can it be the case where silver comes down and then of course our gold analysis here doesn't just push up immediately, but this also comes back down? Possible, right? Okay, so that's the part where I don't use correlation to make a decision on my direction, right? I use correlation to kind of manage my total risk exposure, which I kind of highlight all the time. Okay, so in silver here, very interestingly, we have a setup that we can look to sell it in the near term, right? And this setup here, to be honest, is not the best. What we are lacking is obviously some sort of a liquidity sweep. Okay, we don't really have that, right? Because this market just push up with momentum and then just push down after which. The only real confluence we have is obviously just some sort of a fair gap there. We have the FIPS, this pulls back, looking corrective as of now. And of course, on a higher time frame, we are looking at a potential three-wave development. Okay, now to be honest, if you're not very comfortable in this trade, I would even consider to just skip it. You don't want to force anything in. It's just a potential setup. It's a valid setup, not the most ideal. Okay, so that's my take on silver right now. Okay, we talk about crude oil, S&P. S&P obviously is bullish, but there's really nothing we can look to trade as of now, right? In terms of the scale, the time horizon that we're looking at. The market is basically at the top, right? So even if you want to buy, we always want to wait for the pullback first. Okay, maybe towards like some areas of interest there. Okay, but this takes time, right? So as of now, really S&P, there's nothing much. But we're bullish, right? I think it's very, very clear the momentum is there. Is there a possibility where this actually push down and take out the low before the move back up? There is, right? And then that would then build into some sort of expanding flat. So you're just going to be patient as of now, right? There's really nothing there, so be patient. Okay. Pound yen. Pound yen is also something I'm looking at. Potentially a setup maybe nearer towards the end of this week. What we have is we have this nice little momentum push. The market is essentially consolidating. It did break this high, but didn't really go anywhere, and it's coming back down. There's a very good possibility to break that, so that would be an expanding structure, and this would be the level that we're gonna look to buy. Okay, so on the lower time frame, as the market enters, we'll look for a setup, and then if you get a setup, that will be our potential trade opportunity closer towards maybe the end of this week. Okay, so that's on the pound yen. Odd yen, we talked about it already. Okay, and then we have the pound odd. Okay, pound odd is a very good example of when to be patient. Okay, this is just not the easiest structure to be kind of like deciding and trading on, right? I mean, overall, you can see this is a huge consolidation area. Okay. We did take out that low and the market did bounce. If you look into the details, we do have a liquidity sweep breakup structure as well, and then potentially this comes back. We can look for the trade to the upside. But it's a little bit tricky, right? Because overall, we are basically in this huge range, right? So to be very honest, I would suggest you just wait for either the low to be broken with commitment, okay, and then we look to sell, or the high to be broken with commitment and then we look to buy. If price is just gonna ding dong like that, it's just gonna be very, very tricky, because you can look to buy with this, but then at the same time, this can be seen as a momentum move, and then this can be the entire pullback itself. The market can just keeps going, right? So the odds on this here in terms of the direction is kind of like 50-50. It's not the clearest, right? So that's the part where I'm not just going to be focusing too much on the pound odd. Okay, so another good example to kind of talk about, when to just leave it aside, let the market really do a clean break out of the consolidation phase before we come back in. Okay, Bitcoin, I think it's a very, very clear structure here. Bitcoin will likely just focus on the buy side, right? Just wait for the pullback, to come into the key area, and then that's where you want to look for buy setup. Okay, so that will be the area of interest. Very, very straightforward. Okay, definitely bullish bias on the BTC side of things. Cool. Good. I see a couple of questions over here. Hi Irene, good evening. Janto asks, could you please analyze the Kiwi dollar and the dollar franc? Let's take a look at Kiwi dollar. Okay, zoom out a little bit. Okay, Kiwi dollar. The first thing I can't observe is, we kind of have this low area, okay, and of course the market has put in some sort of a high. If kind of use the trend line here, extend this. My view here, there's a good possibility the market would attempt to come down to this zone. Okay, it's not the best structure overall to be looking at trades, right? Because you don't really have a nice little momentum move. Okay, yeah, it's not the cleanest because you can see this comes down pretty corrective in nature, right? So likely the market will come and retest this area, but whether you're gonna get a nice decent setup, that's another story. Okay, so I would say from an overall structure perspective, there's a good possibility market will retest the area around 5,880. But then again, you want to check and see based on your own strategy or setup, will you get an opportunity to maybe capitalize on that? Okay, yeah, so that's on the Kiwi dollar side of things. Dollar franc here, this structure I think is quite clear, right? Pretty corrective overall. So there's a good chance we'll actually see price comes back down, right? Which aligns with the dollar index, right? Where we expect the dollar index to retrace, to move lower, and therefore, dollar franc here, we're also expecting that one. So I think this one is quite clear. Short term, we have bearish bias, right, based on the structure here. You can definitely look for opportunity to sell, and then with a target at where that previous swing low is. All right, so that's on dollar franc. Rafael asks on the Aussie New Zealand. Okay, so let me just clean up everything here. Okay, we did get a clean break, right, out of that swing high, which puts the market in a bullish market structure. If we can't extend that, the market came very, very close to the 100%, which, to be honest, is not perfect, but I'll put it as a three-wave structure is complete. All right, that would put this as a swing low. All right, so if you start to build a case on this, right now what we can expect is some sort of a pullback, right? Will the market pull back towards the 50 or a little bit shallow, maybe a little bit taking from this low here as a reference to be a little bit more conservative? There is that opportunity where we can look to sell it in the near term as a potential pullback, right? Because if you go down to the hourly time frame, right, you do see that we have a typical setup over here where the market took out that high, but then very, very quickly reverses, successfully take out the previous swing low there as well, right? And in the move that was developing, it had a fabric gap, right? So again, a simple structure setup. If you take fit from swing low to swing high, right? You had that nice little confluence there. So potentially what you can look up for is something like that, right? Right, so on the higher time frame it looks like this. On the lower time frame, that's what we have drew. Okay. Yeah, so again, it's a valid setup. Is a potential retracement trade, right? You're not trading a bearish market. You're just basically expecting after this bullish move the market to do a pullback, and you're looking to trade that pullback, right? So it's kind of a counter trend, short-term retracement kind of setup. Okay. Yeah, so that's on Aussie, New Zealand. Then Novel here asks about Euro Odd and the UK FTSE, right? Let's take a look at Euro Odd. Okay, Euro Odd is okay, basically on a 4-hour time frame, zoom out a little bit, right? You can see that this is basically very, very corrective in nature. Okay, let me just clean up everything. Okay, we can even see this as a potential swing high. Why would I put that here? Is you can see that previously the market broke that high, right? Okay. However, it has shown sign of shifting because the market came down with momentum and managed to take out that low. Right? And of course, in that move itself, there are like fabric gaps created. There's a momentum created over there as well. So that creates some sort of a supply or order block zone. Okay. Then from Elliott wave perspective, this is essentially very, very corrective, right? If I just kind of use a channel, all right, overall you can see that that's a corrective development, right? Which means that there's a good possibility the market will come back and potentially retest this low. Okay, so if you put this together, right, you start to build a case on this particular chart. There's a good possibility we can get something like this, right? So if you kind of take fibs, that's where your 67 fib is as a potential entry. You might have something over there, right? You can even go down to the lower time frame on the H1 to really look into the details of things, right? But I think Euro Odd, there is an opportunity. Cool. Okay. FTSE. Interesting. I don't have FTSE here. Okay, let me add that in. Okay. Let's take a look. All right, this one here is a classic potential crawl. What this means is that you're actually observing the initial push with momentum, and then the market starts to slow down. Okay. Oftentimes when you start to see something like that, you want to be patient, and it often suggests the market would likely do a pullback, or potentially it may be a reversal, right? So at this stage, I would suggest to just be patient, right? So what's a crawl that completes? It looks something like that, right? So something like this might develop here. So you just want to be patient because this might happen, right? Okay. Say the market tends to repeat itself. But you don't want to be selling, right? Because I think in terms of like indices, generally you want to be bullish. Okay, because indices generally it's gonna go higher, at least for the developed markets. So if you're more like, I would say fundamentally you want to look at opportunities to get involved in the buy side instead of the sell, right? Yeah, so this one here, I would say you want to be patient, wait for this to complete, wait for the pullback to complete. Maybe around this zone is where you look for the buy. It's gonna take time, right? It's not gonna be like happening. I wouldn't say this is gonna happen within the week. You probably want to wait until like next week. Cool. Yeah, so I hope that helps. Okay, William here. Joined late. I think we did not cover Euro Pound, right? So I can actually talk about the Euro Pound over here. Good. Let's see. I think this one here, if I'm just gonna update, probably this is the update I'm gonna have for you. Let's just zoom out a little bit. Yeah. Okay. As the market continue to go higher, you just want to be very cautious on the resistance zone, right? We're getting very, very close to that previous high. There's a good chance the market will react off that level. So as you're looking to buy, right? Obviously, this is a bullish market. However, as you're looking to buy, you also want to be very, very aware of where the top might be in terms of like previous significant area, right? Yeah, so this would likely be something like this. Okay, I would really look more into the 618 because I would say the low here might be acting as a potential, sweep of the liquidity. Market tends to break highs and lows. So potentially more of the 618 as a potential buy zone, right? Short-term buy. Right? So pretty clean in terms of like the direction and the structure to look out for, and of course potential targets as well. Okay, so your key area is somewhere around 85.8 0.8580, right? That will be the key area to look out for. All good? Cool. Yeah, so generally that's what I have for the week. I mean, last week and this week so far has been great. You know, pretty few trades that are running very, very positively. Not much of a drawdown as well, right? It tags the entry very, very quickly, move to the target as well, which is great, right? Very, very easy to manage on those trades in terms of psychologically. Yeah. Okay, quick question here that William has to follow on that is, so what if price enter resistance? Okay, so scenario planning a little bit. Okay, if price just starts to go towards that resistance, you start to observe that this will build into a crawl pattern. Then you want to look for potential short-term sell, right? So you start to consider some reaction of this area, confluence with the pattern that is developing. You can start to consider some sort of a short-term sell, right? Even if the sell is not a major reversal, it can be a pullback trade, and then look for upside, right? So you can capitalize on that as well. Okay. So typically, I would say if this just keeps going, right? If I kind of draw it into it, if you start to see some sort of a number one, this is a crawl. Number two, you have an inner liquidity sweep break of structure kind of setup. That's where you can look to sell it there. Alright, so your trade would likely, if that's developing everything like, according to what we anticipate, your trade will probably look something like that. Right? Yeah, so hopefully that's clear. Cool. Good. Okay, so hope that today's session gave you an overview of the week, right? Some of the things that we cover and look into as well, and help you prepare for your own trade plan moving forward. All right, so all the best for the week, and I'll see you guys in the next session. Yeah, good night.